Now you see the example number 25. Srimati Nandini, a member of parliament, furnishes the following details of her income for the previous year 1920. Okay, first point is 30,000 per month salary as a member of parliament. So this is 3,60,000 rupees. Okay, 3,60,000 is the first point. And second point is member of parliament. Daily allowance is there. Daily allowance is exempted from tax. It is purely exempted from tax. Okay. The next is 20,000 dividend from London company. Dividend from a company at London, 20,000 is there. This 20,000 is taxable. Okay. 20,000 is taxable. Then 15,000 dividend from JSW. Jindal Steel Works. JSW means Jindal Steel Works Limited, Ballari. So it is an Indian company. It is exempted from tax. Then winning from lottery, 35,000 is there. Net is there. So 35,000 net to amount is to be grossed up. So it will be 50,000. The value of this is 50,000. Okay. Then factory building let out with plant and machinery. Rent received 50,000 is the gross rent. In the gross rent, you deduct these three. 7,500, 4,000 and 8,000. These three you deduct. Whatever balance comes, that is the factory building. So that's, I think it is 19,500. If you deduct 19,500, 30,500 is the income from this head. This item income is 30,500. Director sitting fee 10,000 is taxable. Dividend from cooperative society 8,000 is taxable. Then she also invested. Invested means amount is there. You calculate interest. If the investment is given, you have to calculate interest. So 25,000, 10% government bond is 2,500. Okay, 2,500. 72,000, 10%. 72,000, 10%, 7,200. But this is tax free. This is tax free. Therefore, you have to gross up. So 72,000 into 10 by 90. This is 8,000. Okay. The next is 40,000, 18% is there. This is also tax free. So 40,000 into 18 divided by 100 into 100 by 90. That is 40,000 into 18 by 90. It is also 8,000. This is also 8,000. So she purchased 20,000, 10% Madhya Pradesh government security on 1/12/2019. This is very important. 1/12/2019. So interest on the above security is payable half yearly on 30th June and 31st December. She purchased on 1/12/19. And after the purchase, she will receive dividend on 31st December. On 31st December, 20,000 into 10% means 2,000. Total dividend is 2,000. Half of that 2,000 she will receive in December end. Okay. So 1,000 rupees she will receive in the December and another 1,000 she will receive in the June. So this June will come in the next year. Therefore, you take half of the interest. 20,000 into 10 by 100 into half. Half you take. Then she claimed the following expenses. She claimed the following expenses. First expense is interest on loan taken for purchase of security, 5,000. This is payable to his friend in America. You pay outside India, allowable, but you have to pay after deduction of tax. But she paid no deduction tax is made. No deduction tax is made, therefore it is illegal and it is disallowed. Remember this. If tax is deducted at source and paid to the lender, then it is allowable. But tax deducted at source is not made, so it is not allowable. And interest on collection charge to the bank is 250. This is allowable. Commission paid for purchase is not related to your other source. This is disallowed. Only one expense is there, 250. You deduct 250, whatever balance comes, that is the income from other source. You see the solution. First point, salary received as MP 30,000 into 12, 3,60,000. Second point, daily allowance is exempted from tax. Third point, dividend from foreign company. Fourth point, dividend from JSW company exempted. Fifth is winning from lottery. Gross is there, net is there. You make it gross, 50,000. Sixth point, rent on machinery is 50,000. You deduct allowable expenses. Rent is 7,000. Repairs is 7,500. Insurance 4,000. Depreciation 8,000. Total 19,500 you deduct. Remaining balance is 30,500. 30,500. Next is director sitting fee. Director sitting fee 10,000 is there. Then dividend from cooperative society 8,000 is there. Thereafter interest on government bonds 25,000 is 10%, 2,500. Interest on tax free. Interest on tax free debenture 72,000 into 10 by 90. So it is 8,000. 11th point is interest on tax free debenture 40,000 into 18 by 90. Again it is 8,000. Then interest on Madhya Pradesh government security is 20,000, 10%. Half you have to take because interest is payable or dividend is payable twice in a year. That is June 30th and 31st December. So this assessee purchased on 1/12. So he will receive December interest in the current assessment year and next amount he will receive in the next year. Therefore, you take half, 1,000. Then take the total. Total is 4,98,000. 4,98,000 is the total. Then less deduction in section 57, collection charge 250. Then balance is income from other source. 4,97,750 is the income from other source. This is the 25th exercise. Then come to the next problem, that is the last example on income from other source. This is the last example on income from other source. Okay, 26th example. Mr. Manohar furnishes the following particulars of investments. He given the investment, then you calculate interest. You calculate interest. 10,000, 10% government security is there. If you calculate interest on this, the interest is 1,000. Interest on this is 1,000. And second, 20,000, 18% tax free is there. 20,000 into 18%, 3,600. And tax free is there, you have to gross up. Therefore, 20,000 into 18 by 90. The second point is 4,000. Okay. Third point, 40,000, 10%, UP government security is there. 40,000 into 10% is 4,000. This is 4,000. Then 36,000 investment in 10%. 36,000 into 10%, 3,600. But it is tax free. So you have to gross up. Therefore, 36,000 into 10 by 90. 10 by 90 you take. This is also 4,000. 4,000. Then 30,000, 13.5% security cement is there. It is not tax free. Therefore, you calculate interest. 30,000 into 13.5 is 4,050. 4,050. These are the investments. Okay, on this investment, I calculated interest. The next is interest received is given. Received interest is there. You don't calculate interest. If that interest is net, you gross it. If interest is there and that interest is net interest, you gross that. 2,000 is from bank. It will not be grossed. And second, 1,000 Karnataka government is there. That is also not gross off. Then 2,700 interest is there. So this 2,700 is from debenture. From debenture, so you gross it, its income will be 3,000. 3,000. 5,000 director sitting fee is there. You take directly. 5,000 rupee. 5,000 rupee you take directly. Then you take the mining 12,000 rupee. Royalty on mining 12,000. Ground rent 13,000 you take. Winning from lottery 21,000 is there. You gross up this because it is net. It is net. Therefore, you gross up that amount 21,000. Okay. Then after taking all these points, you take the total. That is the gross total. Gross income from other source. In the gross, you deduct under section 57. First is collection charge 1%. 1% is there. This is on gross, not on net. So whatever you calculated, that is all gross. Whatever you calculated, all is gross. So on that you calculate 1%. And next is interest on loan taken for purchase is 2,000. This is allowable. Cost of lottery ticket is not allowed. It is disallowed. Okay. Taking into these points, you calculate the income from other source. Okay, you see here. First point is central government security, 1,000. 10,000 into 10%, 1,000. Tax free is there, 20,000 into 18 by 90, 4,000. Third point, UP government, 4,000. Fourth point, interest on tax-free security is there. Its value is 4,000. Fifth point, interest on security. Then sixth is interest on bank deposit. Seventh is Karnataka government security. Eighth point is interest on debenture, 2,700 into 100 by 90, you gross up. Okay, next point is director sitting fee 5,000. Royalty and mining is 12,000. Ground rent 13,000. Winning from lottery 21,000 into 100 by 70, 30,000. And the total of this is 83,050 rupees. This is called as gross. In this gross, you deduct less deduction under section 57. Less deduction under section 57. First is collection charge. Collection charge is 1%. It is on gross, not on net. If they are asked to calculate 1% on net. Again, you have to calculate the net interest. That is by you take the gross income and multiply by 90 by 100 or 70 by 100. Remember this. Collection charges. Gross is there, therefore I will not go for this. This is the gross 83,050. On this you calculate 1%. This is 830.50. So it is nearly 831 rupee. Nearly 831. Then interest on loan is 2,000. Lottery ticket is exempted. No, sorry, lottery ticket will not be considered. Okay, so the total deduction is 2,831. You deduct 2,831. Balance is income from other source. Balance is income from other source, that is 8,219. So it is rounded off to 8,220. Remember this. And this I complete the first unit. First unit, capital gain and other source completed